Boy, that took long enough, didn't it? So in my last video, I explained that the housing market is changing, and boy, that is a relief, isn't it? And since I put that video out last week, there's been more and more mainstream coverage of that change happening. Guys, if you check out this article by Redfin, according to Redfin, housing market update, nearly 1 in 5 sellers is dropping their price, the highest rate since October of 2019. Crazy. So why are home prices finally coming down? Well, if you guys have ever taken economics, we're dealing with a classic supply and demand equation here. The first side of that equation is supply, and supply has dropped dramatically over the last few years, causing there to be a lot more buyers in the market than there are sellers. Next, on the demand side of the equation, interest rates dropped to historic lows, causing buyers' hair to literally catch on fire. They would not stop buying houses. Here, you can have literally everything in my car. You can have everything in my wallet. You can have my kids' college fund, whatever. That's how buyers were acting for a lot of the pandemic. So with a super low supply of houses and a super high amount of buyers in the market, we entered into one of the craziest sellers markets in modern history. But you guys know all that stuff. I mean, we've been talking about this for years now. So the real question is, what is going on right now? What is changing? And the real truth of it is interest rates. That's what changed. Interest rates went from about 3% to about 5.5% in the matter of a couple months. And that is a really, really big deal. Imagine you're interested in a property and the bank says, hey, we'll give you a loan up to about $1,500 a month is what we think you can afford every month. Well, at 3% down and about a 3% interest rate, that's about a $260,000 house. Pretty cool, right? However, let's look at that equation again, but just at a 5.5% interest rate. If you're still trying to spend about $1,500 a month with a 3% down and a 5.5% interest rate, you're looking at like a $200,000 house, maybe even less, depending on taxes and stuff like that. So it's crazy what a 2.5% interest rate change can really do to the home you can afford, right? So what has this done to buyers in the market? Honestly, a lot of them are out. A lot of them have quit. Buyers right now are saying, homes have gotten expensive again. I can get, less home than I thought I could. The rental market's not that bad, right? I mean, everything will be peachy in like a year or two, right? That's right. Side note, if you think the housing market is bad, you guys should look at what it's like to try and rent a property right now. It's not fun. But there's a famous quote by Warren Buffett or Warren Buffet, as some of them say, that says to be fearful when others are greedy, but to be greedy when others are fearful. And Warren Buffett did pretty good for himself. I want to talk to the discouraged buyers out there for a second. Guys, there are a lot less buyers bidding crazy offers out there right now. I know you guys just got over, losing 3 offers because someone donated their kidney to the seller or something wild like that, right? But I want you to know that it's changing. It's changing out there. You really have a shot to secure a property now. Yes, interest rates have gotten worse, but they're still historically low. And to tell you guys the truth, with the way that the 2% and the 3% interest rates happen, I really doubt that we'll ever see that again in our lifetime. I mean, I would not get used to looking for 2 and 3% as the bar, as the benchmark for when it's good to buy a house. I was talking to another agent recently who told me that they bought their first house. Now, this, of course, was years ago, but they said they bought their first house, and it was about 13% when they bought their first house. The financial gain you get from renting a property is nothing. And I know you guys understand that because that's part of the reason why you started looking for a house in the first place. As a homeowner, you gain something called appreciation, which, I mean, if you own a property pre-2020, you were gaining 20% on your property, maybe 15 or 10, give or take on where you are. But I mean, that is super, super valuable. And if you wait a year or 2 or 3, you're not gaining appreciation over those years. You're missing out on a lot of potential equity and a lot of potential wealth down the line. When you own a property, you gain stability, you gain freedom from a landlord, you gain tax benefits, all kinds of things, guys. I would think long and hard about the value you're going to miss out on from not deciding to stay in the race to find a property, and I think you would regret it. I would seriously consider trying to jump in on those sweet price reductions in the market right now. All right, guys, that's it. Please go ahead and like the video. Please subscribe to my YouTube. You can also check me out on Facebook, TikTok, Instagram, etc. I'm out there. All right, I'll see you in the next one.